So good morning, everyone. To me, this day's already started out well. So my typical Sunday morning when I wake up and see my wife and 3 daughters, never have they told me I was part of a brain trust. So thank you, Cindy. I'll have a little lift in my step today. So as Steve mentioned, audit quality indicators, a very important topic that this profession is dealing with. Let me do a quick introduction of our panelists. There are bios in the material at your desk, so I will not do them justice here in the interest of time. To my right, Denny Beresford, University of Georgia, executive in residence, and Denny has been on a number of audit committees in his career, large public companies. To his right, Bill Platt heads the national office at Deloitte. To his right, Zoe-Vonna, Palmrose, University of Washington professor. And to her right, Stephen Chipman, CEO of Grant Thornton. So, and as I said, their more complete bios are in your material, but in the interest of time, I'll move forward. So what's our objective of today's session? It's to have a robust discussion about the CAQ's approach to audit quality indicators, the set of initial audit quality indicators, the proposed communications of AQIs, and the preliminary findings from the CAQ-led pilot testing of the indicators. This session is scheduled for 60 minutes and will include some time for Q&A at the end. We'd like it to be interactive, so if you have questions throughout, if you'd raise your hand, I'll try to acknowledge you, but just out of the gate, I'll tell you we have a lot of material we want to cover, so I probably will only take a few questions before we get to the Q&A time. So audit quality is a concept that is certainly not easily defined. There have been reams of academic literature that attempt to measure audit quality using various proxies or indicators, such as auditor industry specialization, metrics for financial reporting quality, particularly earnings quality metrics, and of course restatements, which I hear we're going to have a presentation on that in the next day or two. Over the last few years, the profession and regulators have attempted to develop a framework that can help identify the factors that both contribute to audit quality and reflect it. A few years ago, the FRC came out with their framework that outlined several key aspects that they felt were critical to audit quality. And then 2 years ago, the CAQ, under the leadership of Stephen Chipman, set out to develop a series of indicators that would communicate information about the quality of the audit. In addition to working with representatives from each of the CAQ's 8 governing board firms, the CAQ also conferred with a stakeholder advisory panel to get their insights into the process. So there's 2 things we want to accomplish with our discussion today. One is to have a robust discussion about the AQIs, and the second is to provide you with a preliminary update on the pilot testing that the firms have been doing around the AQIs. So I will give our first question to Stephen. So Stephen, this past April, the CAQ released its approach to audit quality indicators, which all of you have that material at your table. Can you give us an overview of where the profession landed based on your work?
Yes, thank you, Dave, and good morning, everybody. To pick up on one of Cindy's comments, I'm still actually trying to work out what I did to upset Cindy, such that she asked me to take on this very challenging topic. But I do want to, Dave, start by recognizing and thanking the task force that worked on this. I had the privilege of representing the governing board of the CAQ, but it was really the task force that did all the heavy lifting. And the task force was a group of people that included representation from 10 of the firms, from the AICPA, and they worked tirelessly on this particular project. Multiple meetings and phone calls and video conferences. And I think the scope and scale of their effort not only align with the scope and scale of the challenge, but also reflect the breadth of thinking that went into this topic before we landed on the report that you have in front of you. And let me give give you a little bit of background on that. We started with a very, very broad perspective. Everything was on the table. Profession-wide indicators, firm-wide indicators, engagement indicators, input, output measures. We looked at other industries. We brought in some experts to talk to us about how quality is measured in other industries, because we felt we're not the only profession or industry that has ever tried to measure quality. So we looked at aviation, we looked at healthcare, we looked at some manufacturing quality processes and how those are measured and what are the elements. We talked about the criteria that would make good measurement items. And in fact, if you look in the back of the report, there's a selection criteria which became a very important lens for us to determine the types of measures that we wanted to include. So we started with this very, very broad perspective. And then as we debated and discussed and fought and grappled, we narrowed it down to a recognition that this was going to be a journey, that we were not going to solve everything. There wasn't going to be one index or one quality measure, that this was going to take time and evolve, and we needed to start in a place where we could get traction. And we kept coming back to audit committees. We kept coming back to audit committees with the primary responsibility for the oversight of the independent audit. We kept coming back to audit committees because we learned in our journey that to have really effective measures, you have to have a narrative and a dialogue to go with it. It's very, very difficult to get a good interpretation over a quality measure without some kind of narrative or some kind of explanation or context. And audit committees provides a vehicle to have that dialogue, to provide a narrative, to engage around a set of measures that can provide the highest level of feedback and interpretation over quality. And the second thing we landed on was to primarily focus around engagement measures. Having gone through a big debate and discussion about where the measures should land, we decided to be most effective to get the information in a cost-effective manner, in a manner that could be tailored for specific audit engagements, combined with a discussion with the audit committee, would provide the most value as a starting point. And my final comment, Dave, in just setting this up and why we landed in these particular spots around audit committees and engagement level indicators, is we felt there was a direct line of sight to improving audit quality. Because at the end of the day, we didn't want this to be an academic exercise in the sense that it didn't have any relativity to improving audit quality. And by getting in front of audit committees, talking about engagement level measures, we felt we could directly and immediately have impact on improving the quality of real audits that are taking place every day.
Great. Thanks, Stephen. Zoe-Vonna, I mentioned in my opening remarks that the CAQ convened a stakeholder advisory panel, of which you were a member. What kinds of issues did this panel raise in their discussions with the CAQ, and do you think the CAQ came to a logical conclusion?
Well, maybe I should start by explaining what the Stakeholder Advisory Panel was, just very briefly. It was consisted of about a dozen sort of thought leaders from the investor and audit committee communities, although many of the members actually wore multiple hats. So they'd been preparers, they'd been auditors, they'd been standard setters, they'd been regulators. And then Bill Kinney and I were academics on the stakeholder panel, and we'd also had some, of course, regulatory and standard setting experience. So the Stakeholder Advisory Panel was supposed to provide high-level guidance about measuring and reporting AQIs. And as Stephen said, the task force actually did the work. So it's wonderful to serve on a committee that provides high-level guidance and somebody else does all the work. I highly recommend it. But Having said that, the dialogue of the panel was very robust, very far-reaching, and as the project evolved in conjunction with the PCAOB's project on AQIs, the panel agreed that it made great sense to focus on the audit committee and understood that the dialogue here, that AQIs needed context. And so that context could be provided in the dialogue with the audit committee. So for all the reasons that Stephen talked about, the panel was very supportive of that. But I should also say that the panel members, especially for the audit committee communications, emphasized the importance of measures that were actionable by the audit committee. So this notion of actionable measurement, and that at the engagement level made a great deal of sense too, because those would be actionable by the audit committee. But when the investor representatives also thought that there should be metrics that were actionable by them. And that leads me to a separate point, which is the investor representatives on the panel were very supportive of the direction that this project took in terms of focusing on audit committees. And they were very understanding that this was going to be a journey that took time to unfold. But at the end of the day, when the journey is complete, they really would like to see some public disclosure of AQIs. And I find it really interesting that both the PCAOB discussions with their SAG and IAG, as well as the investor representatives on the panel, when they think of AQIs, they largely emphasize output measures, not input measures. And the top of their list are things like restatements, PCAOB inspection results, SEC, PCAOB enforcement actions, auditor litigation. So some of these really overlap with financial reporting, but they also are metrics that we have a great deal of data on already. So they're already sort of out there. And again, they need context to understand them, but we already have a great deal of information about the AQIs that the investors seem to put most emphasis on.
Thank you. Thank you. Denny, as a former audit committee member, give us your perspective on the usefulness of the potential indicators that the CAQ proposed.
I think this is a great idea. First of all, I think that most audit committee members generally support the direction. If nothing else, I think this will help refute the public perception that audit quality, and frankly by inference, audit committee performance is poor as measured only by inspection failures that we've had up until now. This is what most of the newspaper reports and so forth are. And by the way, Jay Hansen, thank you very much for the change in language in the inspection reports more recently. So having a more balanced reporting of quality and not emphasizing just the inspection reports, I think is, if nothing else, that will be a big change. But audit committee members, other than the chairman and those of us who are kind of gluttons for punishment, probably haven't read those very lengthy and boilerplate reports in great detail. I've haven't really tested this, but I suspect if you gave 2 tickets to the final round of the Masters and put them on page 37 of the firm's quality report, you'd find that not too many of them were actually taken. So succinct quantitative measures unique to the firm or engagement, I think, would be much more likely to be considered. And I think these would be particularly useful in evaluating reappointments or changes. And frankly, in my last few years as an audit committee chair, it was much more likely that we were re-challenging the reappointment as well as not, in other words, not just taking it as just kind of an automatic. We were actually going through a more robust process and asking the firm to give us a lot more information and so forth. And of course, macro data such as industry experience, offices in the right places, and things of that nature would be particularly appropriate. But in the final analysis, the Audit Committee is not likely to rely solely on audit quality indicators to make the decisions, and will do its own due diligence. I think we'll talk a little bit more about that later.
Yep, thanks, Denny. And I guess in my role as a signing partner the last 15 years, and I've rotated on to public company engagements, I've been vetted by audit committees, and some of the things I think you mentioned are things we've discussed. Stephen, I'm going to go back to you. So the CAQ did not work in a vacuum on this project. You had a number of meetings with the PCAOB. Can you tell us how those meetings maybe informed our work and vice versa?
Excuse me. Yes, Dave. It was really important to us we didn't do this in a vacuum, hence the stakeholder advisory group and our outreach to audit committees and audit committee chairs, but also the regulators. And we really wanted a very open and transparent relationship and communication line with the PCAOB in particular, who were starting to look at audit quality indicators. So we were very fortunate that Jay and the team came and presented to the governing board of the CAQ. Greg Jonas in particular has done a wonderful job in connecting with the task force as well as with the governing board of the CAQ. And in addition to those group meetings, we had a lot of one-on-one meetings. Cindy and her team met with Greg and his staff. I met with Greg and his staff on a fairly regular basis. And I think we helped each other. We learned from the process that the PCAOB is going through and some of the material that they have been pulling together. And I'd like to think that we have influenced some of their thinking as well. On that point, I think the selection criteria that we came up with through the CAQ process, I think has been helpful to Greg and his team. So I would say that although there was a potential for it to be a competitive process, it was actually a complementary process and continues to be. And we're certainly looking forward to seeing the concept release from the PCAOB. And I think both efforts are and have been improved by the level of interaction between the two bodies.
Great. Thanks for your comments. Bill, you're a member of the PCAOB Standing Advisory Group. So at its most recent meeting, the PCAOB provided an update on their AQI timetable. They plan on putting out an exposure draft in the next few months. Can you briefly tell us what you learned at the meeting this past June?
Sure, I'd be happy to share a few perspectives. And this part seems a little odd for me, but those that work for either the SEC or the PCAOB would understand that you need to start every comment with a disclaimer. And as a member of the SAG, I have to also give this disclaimer that I'm going to give you my perceptions. They're not perceptions of the staff of the PCAOB or the PCAOB board. So, but I will, notwithstanding that, I will give you my perspectives. You know, I think if you, and as you've said, and Stephen mentioned that, you know, there will be a concept release coming out in maybe this summer, but sometime in the near term. And I think the development of audit quality indicators and this timeline where the PCAOB has been working on development of these standards and the CAQ's efforts have been really going on in parallel. And I think that one thing that's important to both of them as I think about it is that if we were saying we're looking for the perfect measures of audit quality, we would have all declared defeat a long time ago. And I think the effort here is to not let things that could be good get cast aside because they're not perfect and we can't prove necessarily that they're perfect. So as the PCAOB went through their project, Greg Jonas sort of had 7 principles, and I think these 7 principles implicitly or explicitly are very consistent with what we've done on the CAQ side also. And I thought I'd just run through those principles because I think it's helpful in thinking about audit quality indicators. The first one is that quantitatively measurable indicators are what we're looking for. There's a lot of qualitative characteristics you might give about things, but we're really searching for things that you can measure or represent as in a quantitative measurement. In addition, they should provide some incremental insight. There's a lot of information that's already out around audit quality, around audit performance, and we're looking for indicators that will add to the fabric of information around the performance of an audit and its quality. The third one is that they're not benchmarks. If we came up with an indicator, for example, the leverage of partner time on an engagement to staff time on the engagement, at the end of the day, if everybody drove to the average, that would not be a desirable outcome at the end of the day. So the indicator itself is informative, but it's not to try to set a benchmark or a threshold or drive all engagements to a single point. The fourth one is that no single indicator is going to be all that meaningful by itself, but that you're looking for a portfolio of indicators that can build a fabric of information that becomes and brings additional insight around the performance of an audit. The fifth one is at the end of the day, we won't have a formulaic approach. If we end up with 10 indicators, it's not that you can do some algebraic formula with all 10, come up with a score, and then rank one audit versus another from that score. So it's not intended to be a single scoring effort at the end of the day. The sixth one, and Stephen, you mentioned this when you were talking about the Audit Committee, but the indicators are fine on their own, but they're almost meaningless without context. And Zoe-Vonna, you mentioned the context aspect of it too. That really what they should do is stimulate a dialogue, stimulate a discussion, and cause someone to focus on how's an audit conducted, how's an audit performed, and be constructive in that context. So by themselves, not so useful, but provide the opportunity to start a dialogue and to have context. And then the last one is the indicators themselves won't answer any questions. So they're not answers to a question about, like, for example, what is quality. But they will help users of the indicators ask the right questions around that audit or that audit performance. So think about them that way. And I think if you look at, when you even look at the CAQ indicators, I think you'll see that helps frame a little bit what the CAQ was trying to do as it put together the indicators. So back to the concept release, which is what you will ultimately get to the answer to the question you asked me. The concept release, I mean, if we think about it, the staff started with probably 80, 90, 100 possible quality indicators. They spent a significant period of time in outreach and in exploring the value of potential indicators. And I think at this point in time, they've narrowed it down to 25 or 30 that they think could have some promise. And I would expect the concept release to focus on those 25 to 30 performance indicators. I think the ultimate objective will be to get it down to something that's 10 to 15 as opposed to 25 to 30, but the dialogue will be there on the promising indicators. Some of them won't be controversial, like partner to staff leverage that I mentioned before. Others may have different views around them. For example, I said they should be quantitative, not qualitative. Information around tone at the top in the audit organization would be an example of one that you might say sounds qualitative, but if you were to do a survey, a blind survey or anonymous survey of professional staff, you may be able to quantify the views of staff around tone at the top, which may have, some people may have views one way or another as to whether surveys are a good way to actually do that. As I said, ultimately the goal will be to whittle it down to 10 to 15 indicators. The concept release will really have 3 sections in it. Those 3 sections will give a background, objectives, where the project's been. It'll have the potential indicators that I talked about. And then the last piece, it'll explore how should those indicators be best used. Are they best used in a context of, as the CAQ has landed, in discussions with audit committees? Can they be used by regulators like the PCAOB and their oversight of accounting firms? Can they be used by the firms themselves in managing a firm's practice? And then are there other external users that would be interested in them? So it'll explore those that sort of next step about once they're developed, what are the best uses of them and how do we move forward in our journey?
Thanks, Bill. Very insightful. I'll open this question up to all the panelists. So back to the CAQ's approach, focused on communications to the Audit Committee. So why the Audit Committee? Anyone jump in?
Well, maybe I should kick it off. I don't want to be repetitive, Dave. But I think if you conclude that a single measure is not going to be particularly helpful and you want a set of measures, you want them to be primarily quantitative, although not entirely. And in fact, tone at the top is part of the CAQ framework for AQI. And in fact, we reference the possibility of surveys, as you know, Bill, in there. So there are some qualitative features, but nevertheless, primarily quantitative. And then you take it a step further and say, but to bring those alive, to make them make sense, you have to have this context, you have to have this narrative. And there's a good example in the CAQ report. It's a very simple example, but I think it illustrates this very well. You know, if you have a particular engagement and you have significant overtime being worked on that engagement, without context, without the narrative, without the discussion, you could draw two completely different conclusions. You could conclude this was a very inefficient audit, very ineffectively conducted, or in fact could conclude there were significant issues and it was requiring a significant amount of extra time, which was actually improving the quality of that audit that was being performed. So when you take that all together, if you sort of buy into that set of circumstances that I've described, the Audit Committee, given that they're they are the body primarily responsible for the oversight of the independent audit, and there is an existing relationship and forum for discussion and presentation, and an existing line of required communication to the Audit Committee. And the Audit Committee has a responsibility to understand the system of internal control of the audit firm. You put all those pieces together, and it's just a very logical place to present and discuss the set of indicators to get the most meaning, the most benefit. And then finally, you can take that with the Audit Committee, and you can actually improve the procedures and the actions that are taking place to improve the quality of that particular engagement. And one would hope that the cumulative effect of improving all the individual engagements is what will ultimately improve the overall audit quality for the profession or the firm. So that's the thinking behind it. And I'd throw it out to the other panelists to challenge that, or to agree, or perhaps take a different perspective.
No, I very much agree. As a stakeholder panel member, Margot refers to this as the SAP panel, so but I hesitate to use that in public, so cut it from the tape. But when I first read it, it seemed to me that these were very common sense measures that helped the Audit Committee do their job, essentially. So it was really a way to provide information for the Audit Committee to do what is really their job in terms of monitoring and oversight of the audit. So it was a win-win in terms of communicating information in that regard.
Well, I hadn't really thought of it in these terms, but an integral part of the Audit Committee's responsibility, and management's responsibility for that matter, is monitoring the performance of the external audit firm. And so every Audit Committee has its own procedures, but on all of my jobs, we developed forms that we use where the Audit Committee and management went through a process of surveying different people in the company to get feedback on how good of a job did the audit firm do. And that was more of a just performance feedback type of a thing, more just a judgmental type of a process. But it seems to me that combining that with the type of activity that Stephen and others have talked about would be a very good process. That's more just a survey type of an activity, but it becomes very, very much just subjective, but I think it could be enhanced greatly.
Yeah, I think the point on audit committees, and Stephen, you said it well, is the audit committees are the ones that are appointing the auditor. They're exercising oversight over the auditor, Denny, as you mentioned. And I think the point of the fact that we're probably at first not going to have a perfect set of indicators. We will learn which indicators are better than others as we go forward, but also the point that indicators on their own, without context, without that dialogue, without that discussion, really are of limited use. And we really only have an opportunity to have that dialogue at the audit committee level at this point in time. We don't have an opportunity, a dialogue with an investor around a particular single audit. We don't have an ability to talk about a single audit with an academic maybe that's doing research on it due to confidentiality and other reasons. So I think that if you think, the evolution of it, I don't know where it'll end up 10 years from now, but I firmly believe that the starting point of this journey is having that, using quality indicators to start having robust dialogue with audit committees about individual audit engagements and using it to drive improvements in audit quality, not using it to have people have a blazing light of hindsight kind of view about, well, do I think that this audit was a higher quality than another or not? I think it's the right place to start. And I think we should use this as really a catalyst to continuous improvement. And if we get good enough at that, maybe ultimately it also becomes a measure, a set that helps measure quality. But I think today we're probably not ready to declare victory on that.
But I think, Bill, Mike Cook even at the SAG meeting made the point that this is something that audit committees can get started on now. Yes. They don't have to wait for the concept release. The CAQ metrics get a good start on this, and it's something that can happen now. Yes. So the journey can take a real leap forward at this point.
Yeah, Dave, I'll just pick up on a couple of comments that have been made. And to that last one, Zoe-Vonna, the approach in the CAQ report is very much focused on tailoring. So it's not a one-size-fits-all, and that was a point I wanted to make, that the audit team should work with the audit committee to tailor the measures in the report to best suit that particular engagement. But I wanted to pick up on this concept of evolution, Bill, because I think that's really important. I think this is the beginning, and it will evolve. And I agree with your statement that this is the best place to start. But now I want to go back to something that you said, Zoe-Vonna, about the feedback we got from the Stakeholder Advisory Panel. I think the profession has to recognize also, and we did as a task force, that there is a demand for more public, open, transparent measures that the investor community and the broader stakeholders can look at, because they don't necessarily have that view into that conversation in the audit committee room, which gets into a whole other conversation, of course, about audit committee communications and the dialogue that's been going on around that. I'm not trying to take us down that path, you'll be pleased to know, Dave.
We only have an hour. We only got 27 minutes.
Yeah, right. But I think it's important for the audience to know that the task force was really honed in on this, and that we're not satisfied. We're pleased with the starting point, but we know that ultimately that's not going to meet the full demand of the marketplace, the broader stakeholders, and we have to use this, to your point, Bill, as a foundation to move to something that's more market-facing at some point in the future. But there are enormous challenges with that, and we'll learn a lot, hopefully, in this process that will give us the ability to move in that direction.
Yep. Well, thank you all for your very insightful comments on that question. Denny, you've been very public with respect to your views on evaluating the engagement partner at the time of mandatory partner rotation. I guess, what's your experience on how audit committees actually assess the knowledge and experience of the incoming partner? And then follow on to that, do you think that there's more qualitative factors that audit committees should take into consideration? And could you tell us about your views?
Well, as I said before, Dave, I don't think that audit quality indicators are the be-all and end-all. I think that for the most part, the audit committee people are going to do their own due diligence, and that is going to involve things like calling other audit committee members, for example, and checking out how a potential new engagement partner has done on their engagement, things of that nature. any number of things. It used to be, not, I don't know, 10 or 15 years ago, that when there was a rotation, the audit firm would just say, here's your new audit partner. Those days are long gone. These days, depending on the engagement, the audit partner may get 2 or 3 different candidates. They may go through multiple panels of partners if some of them are not acceptable. And it's a very, very careful process. In the final analysis, the audit committee, and particularly the audit committee chairman, has to feel very comfortable in working with the new engagement partner. There has to be obviously complete trust. There has to be great communication style and ability to work together with that person. Now, you're not going to probably get that out of just 2 or 3 different interviews right away, so you're going to rely on what other people have said about that person, working with somebody for 5 years or a couple of other rotations earlier on. Sometimes these kinds of things sound like, well, you want somebody that you can get real cozy with. That sounds like a little bit of lack of independence or something like that, but that's not really the case at all. I think it's really more a case of 5 years goes by very, very quickly. And if you don't have a running start with a new engagement partner, it's not going to be a good situation. You need to hit the ground running with a person. Usually, at least my experience, on a larger engagement, a new partner is going to probably be picked anywhere from 6 months to a year before the rotation starts. They're going to shadow the engagement, come to a couple of audit committee meetings before the engagement starts formally, and so that they will at least have some familiarity. Obviously, their clock is not going to officially start until they take over. But it's a very, very careful process, and it involves a lot of behind-the-scenes study in addition to making sure they have the right kind of credentials and the right kind of background, those sorts of obvious types of things.
Yeah, as you say that, I've known from my own situation a partner who just replaced me on an engagement. One of the audit committee members knew, 3 people removed that you were on this client before, and I know that audit committee member and did some background checking that we should have expected, but was a little bit surprised when that discussion happened. All turned out well, which was good. I use that as a lesson for some of my folks who say, what you do 5, 10, 20 years ago still has an impact on your career sometimes because that person knows this person. I'm going to shift gears here for a minute. I mentioned at the outset that one of the things we wanted to cover is the pilot testing that some of the board governing firms are working on. So Bill and Stephen, how is the pilot testing being done at your firms?
Thanks, Dave. Well, let me start, first of all, with the scope and scale of the pilot testing. We've actually got nine firms involved, somewhere in the range of 25 to 40 issuers spread across those 9 firms. We're focused on the 2014 audit cycle, and there'll be a number of phases. Phase 1 is primarily focused around our actually getting buy-in from the audit committees to work with them on this, and then secondly, testing our ability within the firms to gather the data, because there's a lot of emphasis on quantitative information, as we've already discussed, and we want to make sure that we can all gather the data. One of the elements that is very important in the AQI approach, as articulated in the CAQ report, is scalability. We have firms of different sizes, we have issuers of different sizes, and so the scalability challenge will be tested in this phase 1 of the pilot approach as well. And then we'll move to a second phase where we will actually engage in discussions at the audit committee level and gather feedback around the usefulness of the indicators, the robustness of those conversations, and the outcome from those conversations. In terms of Grant Thornton, we have 4 issuers that we are working on. and across different industries, manufacturing, oil and gas, biotech. We've just about finished the first phase. We've got support from all of the audit committees. It's interesting. Some of the reaction has been, "Oh, that's interesting. We'd be more than happy to do that." And in one particular case, we've got an audit chair that's sort of banging down our door. He's so excited about wanting to do this, and is really, really interested in getting engaged with us. So it's all been supportive, but in some cases it's been incredibly supportive. And for the most part, we've been able to gather the data without significant problems or issues or added burden. It seems to be reasonably ready available within our information systems. So we'll be, during the rest of the summer and into the fall, entering the phase 2, which is really where we'll start to understand whether this is getting traction or not when we have conversations with the audit committees.
Yep, great.
I think that's great background. We'll have either 3 or 4. We have three audit committees that have agreed through that phase 1. 4th, we're still having dialogue around. And in 2 of the cases, we've actually created the audit quality indicators and had our initial meeting with the audit committee. And I would say that the approach in both of them has been different. And I'm not saying that necessarily in a bad sense, one way or another. One was very engaged and actually dedicated a significant amount of time at an audit committee and pre-audit committee, where they actually not only said, yeah, fine, report what the CAQ says, but they looked at it and they decided what information would be most meaningful to them. They added to some degree to some of the performance indicators, and honestly, some of them they took away. So it's not a holistic sense, as you know, it's not the exact book you have there. And then they had a very robust dialogue. Now, I've only heard feedback from my team's side of it, and the next step will be to go back to the audit committee chair and say, okay, what did you get out of it from your side, and how does that work? How did that work for you? Was it effective? But at least it was a very engaging dialogue, which we think is promising, that there was interest by the audit committee members in it, and they thought there were things worth spending their time on. In the other case, it probably followed pretty much the right to the letter of, here's what that document says. These are the indicators. Come present, but you know we got kind of a cramped agenda. Here's 10 minutes of time to do it, which doesn't provide a lot of context yet. But once they heard that, they said, oh, you know what? We need a follow-up meeting in September to talk about that. So you know, they need to try to find time in the agenda to have a more robust dialogue around it. So that's sort of where we are on those 2. You know, I would also say that really, you know, it's a lot to say. You can generate the audit quality indicators, you can gather the information, prepare them in a form, engage in that initial dialogue. And that initial dialogue is very, very helpful. But actually, as we progress through an audit cycle, and what we've presented for our 14 audits is what our plans are for the 14 audit. And the one thing we do know is that there will be clients whose plans, the plans we have for them, won't play out exactly as we plan them to do. You know, somebody will leave the firm, so a transaction will happen at the company, something will happen either, you know, within our audit side or in the company side that'll change how we staff that particular audit, how we deploy resources to it, and the approach we take to it. And I think it'll be interesting to see as we go through the full audit cycle and continue to have those dialogues about those things that changed and why, and what's our reaction to changes in circumstances, and how did we continue to drive top quality, notwithstanding the fact that something that we didn't expect happened, I think will be very interesting to tell. So I actually view this sort of as I look at any of these individual clients, this really is almost like a one-year journey to take us through the full audit cycle. But I think we're off to a good start. I think it's promising, and I'm hopeful that this proves to be something that is a catalyst to increasing focus on the way audits are performed, driving improvements in audit quality, and having being a real key to continuous improvement activities.
Yeah, thank you both for your comments and appreciate.
Could I add one
Absolutely.
comment? thinking back, audit committee meetings are very busy, and frankly, the amount of time given to the external auditors is pretty cramped. And if over time this topic could be, if it could be focused more on why this is going to help the audit committee show that it's doing a better job, I think will help raise its profile, and will get more support from the audit committee than just thinking of this as just a pure external audit type of a presentation.
Yeah, and I would hope, Denny, that I
I
agree
think
with you
because
totally.
you're going to continue to have the scheduling
Right.
issue otherwise.
I'd hope that there's a large percentage of these initial 30 or 40 that are in the pilot, that the audit committee chairs sort of become the apostles for the benefits you can get out of this approach. And certainly all of our teams that are going through it are learning by it too. So, you know, I think it is a good way to if we make it effective, and we need to do it well the first time through. We'll do it better in the future, but we need to do it well. And if we can generate kind of the enthusiasm that you're talking about, yeah, then I think it can sort of spread throughout the audit committee community as being something that there would be, if you weren't doing, you would say, well, geez, I really have to get that on my agenda. That sounds like something. I mean, you talked about before, you talked, Dave, about, you know, the 3 connections away on an audit committee member, and that kind of enthusiasm is, I think, what we have to generate around this.
Yep. Great. Appreciate the comments. I know Stephen and Bill, you both mentioned these are in the early stages. Any indication, incremental to what you've already said, about what the pilot test is finding at your 2 firms? Or is it just too early to tell?
I think it's a little too early. I wish we were in a position today to really share that with the audience, but I don't think we are. I'm delighted, Bill, you're a little further ahead in terms of some of the conversations. And I suspect we're going to see results consistent to what Bill and his teams are experiencing in the early stages, but we'll see.
Great.
Do you have any, I just wanted to ask, do you have any sense yet how the team is internalizing this process? Or is that too early to tell?
Yeah, I mean, I think the teams are, you know, first place, they haven't been through the journey for the past couple of years, right? So I think the teams are viewing this as a learning exercise to get up to speed in terms of where we are in this project and where we are in our journey to developing indicators, and then getting themselves in a position that they can then explain it to audit committee chairs and audit committee members, because as much as our teams aren't up to speed on it, the audit committees are either even a step further back. So I would say that, you know, they're viewing it, I think, as a constructive learning exercise at this point in time. I don't necessarily have a lot of views back from teams, you know, in terms of, aha, this is a perfect indicator, or aha, I really question another one necessarily. But I think it's a good dialogue, and it's actually, I mean, it's kind of a, you kind of even talked about another benefit of this is that I always say this in consultation sometimes. Is I sometimes think that 80% of the benefit of consultation is preparing to consult with somebody else. And I actually think that 80% of the benefit of this might be our teams preparing to have the dialogue with the audit committee in holding themselves to these standards. So it'll be interesting to see, Zoe-Vonna, but it's probably too early to tell totally. Yeah.
Great. Well, now it's your turn. So we have about 10 minutes for Q&A. If you'd raise your hand, I will recognize you, and then speak loudly, because I don't think there are mics around the room. There are mics around the room, so if you raise your hand, someone will bring you a mic. So anyone have a question for our panelists? Very clear. There they go.
Two PCAOB questions.
And I'll give the standard disclaimer for them. They're speaking their own views.
Standard disclaimer, my own views. Just a couple comments. And one, Bill, I think you did a good job of articulating the concept release and where we're going with it. And there's no actual rule proposal there. It's just a concept release. And we don't know if ultimately we will ever need to do a formal rule proposal. It might be this generates enough discussion that this is a good ending point. And one of the things that in my looking at some of our own internal materials relative to the draft of the concept release, and I haven't seen seen an actual draft yet, so it's a little ways away, is there won't be anything brand new, lightning bolt from heaven, that there's something in here we haven't already talked about. It's essentially a compilation, codification of all the things that we've talked about in our various outreach meetings, the investor advisory group, the standing advisory group, and trying to put it into a holistic context with a lot of questions around it. So still hoping for the next several months for that to be published, but don't have a good read on the exact timing. The other thing that we're working on, which is extremely difficult, is we can all have good, happy thoughts about what good audit quality indicators are, but the real acid test is, do they make a difference? Could there be engagement A in Bill's firm and engagement B that you could say, well, the metrics pretty much line up, but A did a good job and B didn't do a very good job. So we're really trying to probe a little bit more to say, do these really meaningfully make a difference in judging the quality of engagement? That's extremely difficult to do. And historically, we have not accumulated information in our own files about what goes right in an audit. We generally accumulate information about what we see for deficiencies. And so we're having to reach out to the firms and say, gee, let's pick some audits either that you think were good examples of, wow, this team really got it, or ones that we maybe saw that, and do a little deeper dive as to how do these metrics to know if they make a difference. Because in the end, if we get a happy talk set of metrics that don't make any difference, this project will have failed. So, but that's a really tough slog to figure out, do they really make a difference? But it's something we're very concerned about. But good, if they're interested in any comments, and that from any of the panel.
Yeah, Jay, I think you make some excellent points. And, I kind of look at this and say that it would be a mistake to think that it's someday, somebody said when we're at the end of our journey. I don't think we should ever be at the end of our journey on this particular topic. I think the indicators will continue to evolve. At the SAG meeting, the comment was made that, well, root cause analysis or causal factor analysis and audit quality indicators are two sides of the same coin. One's taking a bottom-up approach. Root cause analysis says, well, if you've got a high-quality engagement or you've got a low-quality engagement, what are the causes, what led to that, and move it up then into the firm level. And the audit quality indicators are taking measurements and saying that, well, at that level, trying to draw some assessment of it. And I think that as quality evolves, we will find different things drive quality in an organization or in a firm. And therefore, we're going to continuously learn new things that are important. And those new things will often result in a new quality indicator. And I would say when I say from that standpoint, at least from my leadership in terms of managing quality within a firm, it's going to be important to me to define indicators that sort of continue to evolve as the firm's practice continues to evolve. And so I actually agree with you that I think that this is evolutionary, and I know there's a lot of good work done by your staff, both in terms of gathering data for all inspections and doing some data analytics, which we do in the firm too, and then the work your teams are doing around root cause analysis too is I think helpful and informing, and it is good to see that and quality control standards are the other piece. It's good to see that in the regulatory environment, we've got quality control standards, root cause analysis, and audit quality indicator teams being fairly integrated in terms of the way they're approaching this as a holistic way to drive improvements to quality.
I just wanted to make a brief comment. First of all, I wanted to congratulate the CAQ on this project. I think the paper is outstanding. You've really moved the ball forward in terms of audit quality indicators. And I agree that auditors could start having these kinds of discussions, hopefully right now with audit committees, with the type of measures that you're including in here. And I think audit committees and auditors together can really improve audit quality with the kind of discussion that you're talking about through this document. So I congratulate the project, and I think the panelists did a great job today. I just wanted to make one point. One of the measures that's in the CAQ book is the number of inspections with Part 1 findings. And a point was made, Denny, that and terminology does matter, but I think for the academics here, I just did want to point out something that although the term audit failure came out of Part 1 findings are still described as situations where the auditor did not obtain sufficient evidence to support the opinion, and as such, the audit report should not have been issued. So that's still a pretty strong message. So the message hasn't been changed at all. a Part 1 finding is still of the same consequence, and an investor is relying on an opinion on financial statements where the Part 1 finding says that audit opinion should not have been issued. So still pretty severe and still very important, I think, for the academics to recognize what a Part 1 finding is.
I'd like to echo Marty's congratulations to the work that's been done in this space. Certainly, I've appreciated the updates, Cindy, that you've provided to the SEC staff as this has been moving forward. And it's almost mesmerizing to listen to Greg Jonas talk about this topic and to hear you all talking about it this morning. It's a topic that I have felt passionately about for many years, and I'm glad to see a lot of progress, good progress being made. This may be slightly off point, but I thought I would raise it because I don't have the opportunity in public to congratulate the PCAOB in this way often enough. And I just wanted to comment that the PCAOB has made some real improvements from my perspective to the content of inspection reports, including more detail, granular detail on the aspects of standards that haven't been complied with. And in light of that, and there's only a few inspection reports that are out now, or a couple, I guess, inspection reports that are out that do this. In light of this, I wondered if the task force has thought about the implications of that and how that might be used relative to audit quality indicators. And I think there's obviously a lot the academic community can do with this information as well. So I just wanted to comment on that, and if you haven't looked at it, encourage you to think about the changes in the content. I know the PCAOB is thinking about feedback, obtaining feedback through public outreach later this year on content of inspection reports. And if there's more feedback to provide there that could be useful to feeding this project, I think I'm sure they would welcome it, and certainly I would. Thank you.
Yeah, thank you, Brian, and thank you, Marty, too, for your comments. Very, very much appreciate them. As you know from the framework that has been published, articulating and describing inspection findings, both internal and external, including Part 1, are an important part of the indicators we want to have a dialogue with the audit committees, and we need to continue to challenge ourselves to find the best ways to articulate those and then create the right dialogue around the changes that need to be made to improve the audit procedures or the system of audit quality control within the firms to support them. So specifically, no, we haven't, but I think it's a great suggestion that we put that into the mix of our discussion as we move forward.
Can I just pile on a little bit here from an academic perspective? I really highly encourage everyone to read these inspection reports and that section of them, because it illuminates issues that the areas of standards that were issues that you couldn't get from reading the inspection reports before. So they're highly informative, and I think you're not only going to find them helpful for research questions, but also for teaching. So I plan on using them in my class in the fall. So I do highly recommend them. Very, very illuminating.
Great.
So thank you to the PCAOB for doing that.
I'm going to unfortunately have to cut the questions off to respect our other presenters today. So appreciate the questions that have come forth. Appreciate the panelists. Stephen, you have
Dave, I'm sorry, but I would be remiss if I didn't make one last comment, and I apologize for interrupting your close. And I may have to apologize again by the time I'm finished, because I don't know that quoting Winston Churchill on a Sunday morning in Atlanta is a smart thing to do. But we've talked a lot about this being a journey and evolution, and this being the start. And so there is a Churchill quote that comes to mind, and that is, "This is not the end. This is not the beginning of the end, but merely the end of the beginning." And that's a message that I just wanted to convey to the audience, that we're really just getting started as we wrap this up. So thank you for your indulgence.
Absolutely, great quote. So I encourage all of the academics here, when the PCAOB's concept release does come out, to provide comment and feedback on that. And I would like to thank the panelists, who I thought did a fantastic job to kick the day off. So thank you much.